Hello, my name is Sab. Are you ready for Sab's 60-second challenge?
Sam, I am, and it's a very great pleasure to meet you. Thank you.
What's your job?
My job is to try and make sense of people's investments and make sure they get the best possible return for their money according to their financial plan.
Explain your fund's key points.
The key points of what we do at Seven are make sure we fulfill the client's aims and goals in terms of making money for them, but at the lowest cost possible, and make sure they've got enough security that they need to feel comfortable.
So, what makes your fund different?
7IM funds are different because what we do is try and measure the volatility and make it as smooth a ride as possible in the most dangerous of times that we're living through at the moment, and try and reduce that cost.
Am I really expected to understand that?
It's difficult to understand it, and it's my fault for using the wrong language. What we should try and do is make it as simple and straightforward. After all, it is your and your client's money, and therefore it's a great privilege for us to be able to look after it. Basically, what we've got to be able to do is fulfill your needs and requirements.
How's your fund going to make my clients money?
Our fund will make sure that we actually fulfill the requirements as laid out by their financial plan. How can we do that? Because we invest in lots of different things all over the world and keep an eye on them every single day.
Wouldn't I be better to put my money in the bank?
No, you are not better off putting your money in the bank. Why? Because the interest rates are awful, and look at the rate of inflation. In real terms, every year you'd be losing money.
What is active management?
Active management is where managers can actually buy and sell things the entire time with the aim of trying to beat their benchmark or their target. Unfortunately, though, it can be quite expensive, and it turns out that over 80% of them can't even reach their benchmark.
How important is benchmarking?
Benchmark is a target for which you're trying to achieve. Why do you need to be able to achieve that? Because you need to fulfill the goals for your life, and in order to do that, you need to have the goals for your money, and therefore we need to make sure we reach those benchmarks. And if you can't do that, and if you're paying too much for it, then you're losing money.
What do you mean by passive?
Passive means that you're not actually having to buy and sell things the entire time, but rather you're investing in indices. That's to say those measurements of stocks and shares and bonds and other asset classes. They're a much, much cheaper way of being able to do it. And then what we then do is we'll move around those passives every so often according to the markets, but we're not having to incur the cost every day of trying to buy and sell shares and other things.
Shouldn't we all invest in passive funds?
Passive funds are good for some people some of the time, and so fulfills part of the requirements, but not necessarily all of them. That's why you have a blend, Sam, to make sure that all of these are there to fulfill the role that you need to fulfill your client's own requirements according to their plans.
Does cheap mean good?
No, cheap is not necessarily good. It's value that's important to make sure that you're getting a proper return. There are some very good active managers, and I know you use some as well, but we prefer to use the passive ones because we think we can provide very good value for people as part of your range of funds and portfolios.
What is quantitative easing?
Sam, that's a great question. You actually look around the world, you'll find lots of different definitions of quantitative easing. You've got the Americans using it at the moment, we've been using it as well, and there are lots of different ways you can describe it. Fundamentally, it's the means of getting more money to go into the economy. On the basis if there's more money into the piping, then as money flows through the piping, therefore actually more money is being spent, and therefore actually the economy can start picking up again. That's the theory. What they actually do is they issue government bonds, treasuries if you like, and they then will actually then buy those, and the money that they buy, then they'll have cash from that, they can use that to put into the banks. They put that into the banks, and then hopefully the banks will lend it out. That's one way of doing it, but
I need to hurry you up.
well, actually what I meant was what you've got is then the Bank of England then has this cash. It puts that cash into the bank accounts of the banks themselves. They can then use that money to not only make sure that their balance sheets are stronger, then they can actually use it to lend out to more people. So that actually...
Why can't the Bank of England just print more money?
The Bank of England in theory could actually print more money, but of course what you're dealing with then is actually government having more borrowing. And that's one of the big arguments at the moment, that the government's trying to cut down on borrowing and not increase more. So the big argument in the economy at the moment actually is, do we just keep on cutting or should we be investing? The answer, of course, is probably both, somewhere in the middle. So will the bank be printing more money? Yes, it probably will.
Why is gold regarded as safe?
Gold is safe because you can touch it. It's something almost emotional about it. But be wary, gold doesn't actually do anything. You don't make anything with it except gold things. It's a bit like a sort of financial teddy bear. You can hold it, cuddle it, stroke it, even put it on the pillow next to you. But it doesn't do anything else, I'm afraid. You'll never earn any income. You can have a lot of gold, but you could still find yourself with no food.
Should we be in the euro?
Ah, thank heavens we didn't join the euro. Well, at least not the current euro, and assuming the euro is still going to be there. The great thing we've had with sterling is that we can be flexible. Economies need to be flexible according to how they behave. Bear in mind, Britain is still the 6th or 7th largest economy in the world. So we deserve to have our own currency and to be able to have it adjust according to how we are actually operating.
How will China affect the world?
Sam, China's going to have a huge impact on the world, both in the short term and the longer term. In the longer term, obviously, it's one of the world's largest nations and it's got the world's largest population. So it has to have an impact by the very dint that they're going to be buying more stuff. Therefore, we have the ability to provide stuff for them. Equally, of course, they've got lots of reserves and assets because they've been selling lots of stuff, particularly to the Americans and us.
What does it all mean?
So they'll be using those reserves to actually buy other elements around the world. They've been buying companies, they've been buying parts of England and Scotland. But we need the Chinese, but the Chinese need us. It's going to be a form of sort of symbiotic relationship, if that makes sense.
And what does that mean in English?
Sam, you're absolutely right. We need China because China is going to be one of the world's largest economies. It's the largest population and we need to be able to trade with them and they should be wanting to trade with us.
Should I spread my assets?
It is absolutely vital you spread your assets. Otherwise, you find yourself investing in one main asset, often just shares, and often that just ends up as a pogo stick. What you want to invest in is something with lots of different legs, because if you've got one or two wobbly legs, it doesn't matter. Investing is about making money in the long term safely and securely. It's not about having a bet. That's why we go to the races.
But what if your company goes bust?
Ah, very important point. When we set up Seven Investment Management, we made sure that all the assets are ring-fenced and actually put into a separate account under Bank of New York Mellon, one of the largest banks in the world, and it's covered under a separate guarantee, so that all client funds are 100% covered. So if Seven Investment Management isn't there, all those funds are secure.
How much do you charge our clients?
We focus on taking the cost out and making sure they're as cost effective as possible so that clients get much, much better value. And that means not using all those expensive active managers that are around, but actually making sure we can focus on institutional asset allocation, a broad range of asset classes at the lowest cost possible.
Are there any hidden charges?
We make sure, absolutely, when we set up Seven, that we were totally clear over all charges. So it's clear as to what we earn, what we make, and therefore how we make it. So I want to make sure that all clients are absolutely clear how much they have to pay. I don't want any hidden charges anywhere at all.
What about dealing costs?
Good news is we don't have any dealing costs. Why? Because we only charge a fee. And the fee actually just really is based on the value. Does it go up or down? If it goes up, we earn more. If it goes down, we earn less. That's it.
Thank you for taking Sam's 60-second challenge.
Thank you.
More Sam's 60-second challenge coming soon.